All right, everybody. Welcome, welcome, welcome. Can you close that door? Let's get this going. Today, we're going to be covering some real estate again. I think this is going to be this is going to be our fifth or sixth class together going over real estate. I'll give people about another minute or two to kind of fall into this before we get going. Some people have already been taking these classes and putting them to work. A few people have reached out to me already. They've been in the process of trying to close some deals. They've been doing their homework and they've found deals. They got some offers in on deals. A couple people have gotten creative that have reached out to me, asked me questions on certain things. Some people that are already in real estate, they had a few questions on things that they were trying to do. They were able to get those things done. So that's why it's important for you guys to know what questions you have when you come in here. Have some questions. If there's something, if you think about throughout the day that you're curious about, or if you hear something, or someone maybe told you something and it maybe didn't sound right, or it could be anything. Any questions that you guys have, like I said, I want you guys to ask these questions. I want you guys to reach out to me via social media or through the Wealth Squad and ask me questions, right? That's the whole point of this. I try to get back to you guys. I think there may be only a couple people left that I haven't got back to, but I've gotten back to about 97% of you guys. So let's get ready to dive in. I think we got most people in right now. So let's share the screen and kind of get right to it. Boom. All right, so far we've already covered quite a bit. We've covered a lot up until this point. So if you guys have missed any of the previous classes, we record these and we try to get them updated as soon as possible. So I don't cover everything in these classes. Like I said, I typically teach for about 30 to 45 minutes, and then I leave the last 30 to 45 minutes open for questioning just for that purpose, because I know you guys have, some classes will have a lot of questions. Some classes we really won't have too many questions. So I try to leave that time open, and I'm trying to make sure I give you guys, your hour of teaching and hearing people's questions. So yeah, so some of the previous classes we were talking about the benefits of real estate, right? Starting from the very beginning, taxes, appreciation, being able to leverage your real estate to get you more real estate, the passive income side of things like that. We covered, what type of expenses you'll have with real estate, right? Because you're going to have your principal and interest. If you take out any type of loan, you're going to have taxes unless you're a veteran and you're exempt. You're going to have insurance. You're going to, some people have to pay utilities if it's your primary resident, or even if you have a duplex, a triplex, a fourplex, and you rent it out. Some states, a lot of the owners take care of the utilities just to stay competitive based on where you're at. So you might have some utility costs, maintenance costs if you have any yard, if you have a front yard, a backyard, things like that, and other costs that will come up within real estate. We covered all that. How to figure out how much property you can afford, right? Because you can't just go out this real estate thinking you're about to get $1 million property and you don't have $1 million property money, right? So we covered how you can figure out, add up, your income and your debts and things like that. We talked about how you can figure out how much you can afford. We talked about where to find property that match your specific needs, because what works for me is not going to be what works for you, and vice versa. How to find a real estate agent. We covered that. What to expect from a home inspector, how to find a mortgage lender. And then last real estate class we went over property managers, right? Questions to ask them, what to expect from them, what type of relationship you want to build from them, and how important it is to get a good property manager to make sure you're getting, the right rents for your area, and make sure your vacancy rates are low, and making sure your tenants are being properly screened and things like that, right? So real estate is a really big, it's a big piece of pie, right? There's so many different aspects to real estate. It seems like a lot, but once you get going, a lot of this stuff just kind of gets automated. So at first, you might be dealing with, a real estate agent, a new lender, a new home inspector. But once you get that first property under your belt and you kind of get the ball rolling, it starts to get a lot easier. Every deal that you start to do will slowly get easier. So today, what we're going to cover is we're going to cover financing real estate, right? So this kind of is taps in a little bit to what we covered about finding a mortgage lender, but there are other ways to get into real estate besides going through a mortgage lender. So we're going to talk about a few things today about financing real estate, how you can get into it. I'm going to break it into a two-part section because the second half of it is going to take a little bit longer. And so I know you guys are, your time is important. So I try to make sure I keep it within that hour. So let's dive into it. So these are what we're going to be talking about. Part one is going to be FHA financing, traditional banks, and doing refinancing. And then our next class that we do is going to talk about seller financing, which is a really good way to get into real estate. A lot of people don't know about seller financing. So it's going to take a little bit more time covering a lot of that because there's a lot of aspects into seller financing, a lot of good ways you can get creative. And then also partnerships with private lending. That's not going to take up too much time, but we're going to cover that another time. So this class, like I said, is going to be about FHA financing, traditional banks, and then what refinancing looks like, specifically HELOCs. So FHA loans are mortgage insured by the Federal Housing Administration. So, it's meant to boost home ownership among low to moderate income individuals, but it's not necessarily limited to people with low or moderate to income. FHA loans require a lower down payment, 3.5% to 10% based on what your credit is. And they have one of the good things about it, your credit doesn't have to be perfect, right? So if you have a credit score of 500 or better, that will start you to qualify for the FHA program. But the downside to FHA loans is that they do come with more strings attached versus if you were to go conventional and things like that. So FHA has their own parameters on what they want, what you can do, and things like that. And so when you find a lender like we talked about before, and you say, hey, I want to go the FHA route, what are your requirements and things like that? Because I've talked about this before, but it wasn't in the presentation of the class I give, but people were asking a lot about FHA and what they can do and things like that. So just know that the FHA has their own requirements and lenders have their own requirements as well. So you might print off the FHA checklist on, what their credit score requirement is, what they'll do and things like that. But you go to a lender, they could require more. So FHA minimum requirement is a 500 credit score or better. But when you go to a lender, they might say, hey, we require a 600 or a 620 or 650, things like that. So don't be discouraged. Like I said, just contact multiple lenders like I talked about, and then find out what works best for you and whatever you're trying to do. And then another thing is FHA loans can only be processed through an FHA approved lender. So not every lender is approved to do FHA. So that is something that you'll just have to talk about and ask them, hey, do you guys do FHA loans? One of the best ways to start is buying a property with FHA. It's one of the ways that I got into real estate. You'll need 2 years of employment history, and you can only use those loans on your primary resident. But the great part is that you can buy any property up to a fourplex. So, why not live in one unit and rent the other three out? So another cool thing about this is that FHA only requires you to stay to make it your primary resident for a year. And then after that year, you can move out and you can do whatever you want to do. You can bring, somebody else in and you can rent out that fourth unit. If you get a fourplex, or if you get a triplex, which is 3 units, you can live in one unit, rent out the other two. If you get a duplex, you can live in one side and rent out the other one. Or if it's just your primary resident, after year 1, you can move around, refinance, rent it out, do whatever you want to do. So keep that in mind when going about the FHA. So these loans do come with good rates, and the lenders will lend you up to 96.5% of the property's value if you meet the requirements. So I put that in there because, like I said, they do have certain requirements that you have to meet. So always remember that. And for properties that need work, you can take advantage of the 203K program, which which the FHA will allow you to find a distressed property, and you can get the money and the financing to get the improvements that you need, whether it be a single family, a duplex, triplex, or a fourplex. So you do have routes that you can go other than just coming up with the conventional. Now a lot of conventional lenders are allowing 3%, but before it used to just be a typical 20%. So times are changing, things are changing, things are going to always change every year. And just based off of last year till now, with everything that we had going on, lenders were changing, and rates were getting really good because people weren't getting into real estate. People were trying to get rid of the real estate because they didn't know where the market was going, right? People weren't buying, people weren't taking out loans. So when, lenders, that's how they make money. They make money by giving out loans and things like that. So if they're not giving out loans, they're not making any money. So the perfect time to get into real estate was anytime within the last year. Right now is getting a little bit, I don't want to say harder, but it's a seller's market, meaning that sellers now have room to ask for more than what they were able to ask for the last year, right? Most people were able to get equity in their property. They were able to get 20,000, 30,000. They were able to ask way less than what people were selling for because people weren't getting offers. So right now what's going on is that now everyone sees that the economy is starting to open back up. People are starting to see, they're getting hired again, or they're getting new jobs. So what's happening is that people that are selling real estate right now are selling more. They're selling for more than what the value of their home is and what you would have been able to have get it for, let's say 3 months ago. For an example, the house on my block at the corner listed in within 2 days, and it sold for $100,000 more than what market price is. I mean, that's not going to always happen. It's not going to happen everywhere, but based on what market you're in, I've been talking to a lot of real estate agents in different markets, and they've been saying 2 to 5 days is as long as it's taking to sell properties. So what that means is that if you see a property that you like, you pretty much only have probably a few hours to decide if that property is going to fit your needs. And that's something that I talked about. You need to know what your needs are and what it is that you're looking for, because 3, 4, 5 months ago, you had a month, right? You had a month, you had a 2 months because people weren't putting in offers. And then you were also able to offer lower than what people were asking for. And people were actually doing it because that fear that people had. But now it's not, it's the opposite. So now the sellers have the control again, and now the buyers are at mercy. So this is why it's important to know your numbers, to know what you can afford, to know if you're looking to go as a investment standpoint, if it meets your requirements. Know how much you need. Know how much you need to bring in with rents to either break even or put you in the positive side and things like that. So definitely take the time. And then once you have your numbers down, get your offer in and know that, okay, I'm going to put in a good offer. That way, once it gets accepted, you can go ahead and get the ball rolling and things like that. So that was just kind of a little rant, but let's get back into this. So some of the FHA loan requirements, one of the major draws to the FHA loan is that they can be obtained with a down payment that is as low as 3.5% of the mortgage, compared to the typical 20% for the conventional loan. But like I said, a lot of conventional lenders are allowing 3%, and that is just based on the lender. I've worked with some lenders that still are only doing 20% for conventional, and I've worked with some lenders that are allowing as low as 3% for conventional, but that comes with the private mortgage insurance and other strings attached. So some notable key requirements for the FHA include borrowers must occupy the resident and live in the property for 1 year. Like I said earlier, the MIP, which is the mortgage insurance premium, or PMI, depending on, different verbiage, same thing, but this is paid up front, and then it's also paid monthly. And then also borrowers can only have one outstanding FHA loan at a time, and no short-term rentals are allowed. So like I said, there's a lot more requirements than that, but these are just some of the key ones. Like I said, once you guys find your lender, I didn't want to put too many requirements on here and things like that, because one, numbers are always changing. And like I said, every lender is not the same. So I'm just trying to give you some of the basic general ideas so you can kind of get a good idea of when you talk to these lenders, what type of requirements are going to be and things like that. So you can just kind of get a good heads up. But and then here goes some stuff continued for FHA. So here are some of the qualifications. Your FICO score is above 500 or 500 or better. 580 for at least a 3.5% down payment. So I should put an asterisk next to that. So that's what FHA says, but the lender could come back and say something different. This is what I was talking about. And then your FICO score is between 500 and 579 to qualify for a 10% down payment, meaning the lender will cover 90% of the down payment for the cost of the home, and then you come up with the other 10% upfront. Your debt to income ratio is less than 43%. There's a lot of great calculators. I believe I put one. Actually, no, I did not put one in the slide. So if you just Google debt to income calculator, it will be able to help you. So you just take all your income and all your debts. And a lot of lenders want that to be 43% or less. Some lenders will work with you. Some lenders will go up to 50%. But like I said, it's just based on your area and how much, I guess, how many loans those lenders are giving out. Like I've noticed that with lenders that are busier and have a lot of customers, they're more strict versus lenders that don't have much traffic. They're more willing to be more lenient with that debt to income ratio. But that doesn't necessarily mean that it's a bad bank if they, allow 50% or maybe 51%. It doesn't mean anything like that. It's just every bank is different. They have their own, they have their own rules and things like that. So just expect that when calling around and things like that. They're going to want to look at your proof of employment and steady income. The mortgage insurance premium is required, like I said, and then it must be your primary resident. So things that we covered, all simple stuff. It's all pretty easy. There's no trick questions. Everything is pretty much straightforward. And then, like I said, if there's stuff that you don't really understand, a lot of the stuff you can look up, a lot of the stuff you can talk to your real estate agent, a lot of the stuff you can talk to your lender, because there is still stuff, there's still verbiage when it comes to working with the lenders. There's still a lot of verbiage that I don't know or don't understand. So anytime I see something new that I don't understand, I want my lender to explain it to me. I'm like, hey, what does this mean? What can we do with this number? And, my lenders, they say I'm a problem child for them because I'm always asking 50 million questions. So I guess what one of my lenders told me is that most people just take whatever they give them. And a lot of stuff can be negotiated. A lot of stuff can be worked, but you have to think the lenders don't know what your best interest is, right? So they just have a straightforward, like, okay, we're just going to do this, this, and this. And if the person accepts it, they accept it. And then if you're that type of person like me that wants to know, hey, what is this for? How can we get this either rolled into the loan, or how can we get this taken away, or how can we get this on the seller, right? The name of the game when it comes to real estate is, you want to come out of pocket as less as possible. You want to make sure you're profiting as much as possible. You want to make sure you're getting the best rates as possible, right? These are things when it comes to real estate you want to be on top of, and you want to make sure you're getting the best deal that you possibly can. But if you don't ask these questions, if you just accept what these real estate agents send you and these lenders send you, if you just accept it, then you're just going to accept it, right? Even when my real estate agent, when they send me certain things, I'm still questioning, like, hey, what can we do with this? How can we get creative with this? Like, you know what I mean? So if you don't ask questions, you'll never get those type of answers. And then you could be missing out on saving yourself money or helping yourself in the long run when it comes to like time to refinance, when you get that equity, because everything matters. So take the time. Let's keep going. So traditional banks, this is another, this is one of the ways to get financing. So for the most part, the banks will be willing to lend you on small investment properties, or the local community banks. So like your credit unions and things like that. And so when I mean smaller investment properties, these lenders all have different requirements. So let me give you an example. I found I'm even going to tell you guys one of the cities that I was in. So in Ohio, right outside of Cleveland, I found a fourplex, and it was for like 48,000 or something like that. It had tenants all in it. It didn't need much work. Everything was great. The rents were good, and I was gonna make some money on it. But I like to leverage the banks. I don't like using my own personal income when it comes to real estate, right? I want to use the banks as much as possible. It's a strategy that I like. Some people will fight against it, whatever. You need to find what works for you. So I'm just kind of telling you guys what works for me. So for me, I like to leverage the banks. That way I don't have to leverage my own money and I can put my other money to work for me. It's like if I take money out of certain investments, I have a big chance of losing money, right? Because, you know, I have calculated investments. I take my time for my investments. I like, you know, I know when I'm investing my money, I know what it's doing, right? So if I take that money out, I know I'm going to be missing and losing money. So I just leverage the banks, the rates and everything like that work out for me. So anyways, I found this fourplex that was great. It was in Ohio, and I couldn't find a lender because it wasn't enough, because the banks weren't going to make enough off of me, right? They need to make money off of you as well. So they weren't going to make any money off of me. I must have called probably 7 or 8 banks and none of them would accept it. And I found some little tiny bank in the town and they end up taking it on. So you need to look at things like that. The local banks, you know, those small no names, their rates might be a little bit higher, but you might have more wiggle room and get creative and do things with them. So don't just be thinking you got to go to like the Wells Fargos or the Chases or like the big name credit unions. You can go to your small banks, right? They kind of get the trickle down of the bunch, and they still need to make money. They still have to give out loans, and they have to, you know, credit unions, and they have to take on loans that are not as profitable as the big loans, because, you know, they are in a pond with, you know, big fish, right? Credit unions are they're smaller banks compared to these larger banks. So they have to stay competitive. They have to give out these loans, you know, for $20,000 properties, $50,000 properties. Some banks won't even do $100,000 properties, right? So keep that in mind. You may have some luck with the national variety, but they do stay away from those type of loans, and they'll tell you right up front they do. And that's just simply because they won't make much money off of you. You know, the name of their game is make as much money as they can off of these lenders. So, or off of the borrowers, sorry. So ask for referrals. If a bank has lent to another real estate investor who's doing what you're doing, then why wouldn't they lend to you, right? So at the very least, your odds are a little bit better. So the very first place to start is when you're looking for a bank is to ask around. Start by asking any real estate investors that you know. Then go to your local RIA, which is Real Estate Investors Association. I know a lot of those have stopped, but they're picking back up. A lot of them are via Zoom. There's an app, I think it's called Meetup. It's one of those apps where you can find people that are interested in different things that you are, and the real estate is one of them on there. I found a group a while ago, I believe it's called Meetup or something like that, but they have a real estate section where they talk about in your area when there's going to be real estate meetings. Definitely go to these, because you're going to meet all sides of, you know, you're going to meet lenders, you're going to meet property managers, you're going to meet investors, you're going to meet contractors, you're going to meet, you know what I mean? You're going to meet so many different people. It might not be at that one specific meeting, but as you keep going to these meetings, and then your network is just going to keep growing. Talk with other investors and ask them, you know, who they're getting their loans from. I've never been to a meeting where if I asked a question, people didn't answer it, right? When you're in this world, and I say, you know, real estate world, people are helpful. People are very helpful. If you ask the questions, right? People aren't going to just come out and be like, hey, you can do this or you can do that. You know, just start asking them, hey, what do you think about this? Or I got this rate, you know, does that sound about right to you? Or these are the rents that I'm bringing in, or these are the rents that this place is collecting. Like, you know, you don't want to disclose too much, especially if it's a deal that you haven't got yet, because you might, you know, they might try to swoop in and get that deal. So once you close the deal, or if you just have the number and don't tell them the address and things like that. But a lot of these people at these groups are very helpful. You can learn a lot of good information, and it's just a good networking tool. So look into that if you want to. If not, hey, it is what it is. So, hold on, let me mute this person, whoever that is. There we go. Sorry, y'all. Sometimes when people come in,
Sorry about that.
I'm muted. I don't know why. I'm trying to mute everybody, unless someone's just doing that on purpose. All right. So where were we at? All right. And there's no reason to limit the questions to just real estate investors, right? Be open about what you do. Always be asking for referrals. Even if it's unlikely the person you're asking will have some, or look in bigger pockets. A lot of people like using bigger pockets because there's a lot of agents, there's a lot of investors, there's a lot of everything in bigger pockets. So that's just another good network, another good place for you guys to look. Target your network. So while investors are great for bank leads, another place to look is by networking where bankers network. So look into real estate conferences. So this is a really big one. I've went to one real estate conference before, and I build my network a lot because people come, especially the big ones that are in like Vegas, LA, Miami, Seattle, New York, Chicago, Houston, Detroit. There's a lot of big conferences out there, and people come from all over the world. So it's like this is, if you're trying to take real estate serious and you're looking to build and you're looking to grow, that's what you have to do, right? You're going to want to start investing outside of your network. You're going to start investing in different states. You're going to want to start looking at, different deals and how people get creative. You know what I mean? So when I teach you guys this stuff, I'm teaching you guys my ways. I'm telling you guys my experiences. I'm showing you guys what I've been through. So everything that I've gone through and experienced might be, different for you. So it's like everyone, if you talk to someone else that's in real estate, their experience, their stories, and what they tell you might be different than what I tell you. So a lot of it is going to be similar, like, how to leverage the banks, and you know what I mean? So using FHA or going conventional, how to find properties, how to find real estate agents. So some of that stuff is going to be the same. And then some people are going to have little tricks. And then as you go and get into your real estate venture, you're going to notice that you find different ways and different things to network, or different ways to get financing, and different ways to get creative. So that's the name of the game. So it's like there's the basic general information that everybody can find, and then there's going to be your experiences as you get out here and go and do it. And you're going to see a lot of this stuff. So these requirements, I've worked with lenders who don't care about any of these requirements. It's rare, it's hard to find, especially depending on the time frame, but you'll see some of this stuff is just not how it is. I've read so many books, I've went on so many blogs where people are like, it's going to go like this, this, and this, and it didn't go that way at all. So yeah, get out there and do that. But anyways, back to this networking. Other places you could consider are the Chamber of Commerce, property manager associations, and any sort of banker networking event you can find. So just Google banker networking events in my area or upcoming. You can find that stuff. Property management association groups are really, really good to go to. A lot of times property managers will have their own, they have their own association, and they have their own meetings. So sometimes look for those property manager meetings, because you'll find a lot of good investors, and then the property managers, you'll be able to find and hear good things that are going on in your area. You'll be able to ask questions. You'll be able to see what change is coming. You'll be able to see, you'll kind of get a good feel for the area. Like, are there being big builds going on? Are there certain, are they upgrading the schools? Are they transferring the zoning? There's so many different things that come into play when it comes to real estate. So real estate is not a box at all. It's like there is no box. And the more you get into real estate, the more you keep learning that there's so many different ways, right? I feel like I don't even know. I feel like I know a lot, but I feel like I'm not even close to knowing as much as I can know about real estate. And I'm always constantly learning, you know what I mean? So I'm still reading books. I'm still networking. Sometimes I might hear the same thing from 20 different people, but 21, you might hear something different, and it might trigger something in you, and it might be like, okay, that fits me, my style, and what I'm trying to do. And then so you'll start trying that and do that. So don't stop networking, don't stop learning, keep pushing, keep going. So yeah, anyways, back to this. So some banks sponsor events themselves. And a lot of times you could even see, it could be your local bank, ask them if they ever hold any events, or if you're driving around, sometimes they'll have like balloons out and different things like that. Or you can just call around and ask banks, hey, you guys got any type of networking events going on or whatever, and they'll tell you. Always keep your eyes open and always keep networking. So don't be afraid to call around. Another thing that you can do is a good old fashioned calling, right? Call banks and be upfront and tell them what you're trying to do. This has probably been one of the most beneficial things for me in my real estate career, is telling people what I want to do, telling my real estate agent what I want to do, telling my lenders what I'm trying to do, tell my home inspector what I'm trying to do, right? All these different things, because people aren't mind readers. They don't know what it is that you're trying to do. So when you tell them what you're trying to do, they'll steer you more in the right direction versus you going one way, doing all this work, just to come to find out that you guys were going in the wrong direction all along. Your financing was going in the wrong direction all along. You got the wrong so tell people what it is that you want and they'll be able to lead you in the right direction. So only you know where you want to go. Target your calls. The most creative way I found to find banks is to actually search for which banks lend to people like you, right? Like me. The process goes like this. So log into ListSource, DataQuick, or any other data list sites. Search for properties with this following criteria. So in the area you're looking in, is it owned by a non-owner occupant? With the loan taken out in the past year or purchased in the past year? And the price range that you're looking to buy in. Write down each bank which has made a loan to such individual or companies and give them a call. So what's great about this method is that it narrows your search down and it limits your cold calling versus you just getting every single bank and calling around. This is a good way for you to go and see who's giving out loans and who's giving out loans to properties that you're looking at, that fit your price range. So all this stuff kind of comes back tenfold, right? So in the first real estate session that I was teaching about, I was telling people, showing everyone how to figure out how much property you can afford, how much home can you afford. That's once you know how much you can afford, it helps you, it eliminates searching for properties that you can't afford. And then it lets you know what your budget is right away. This helps when it comes to getting your lending and things like that. So all this stuff kind of comes back tenfold in a circle, and you guys will notice that as you kind of get out there and start doing it. Refinancing. So this is another good way to get creative, and this is a good way for you. This is more for people who are homeowners right now. So if you're not a homeowner right now or you don't have any property, this won't really pertain to you yet, but it will pertain to you once you get a property and down the road you get some equity in it and you're looking to refinance. So this would be for you as well down the road. So if you own your home, and when I say own, I'll tell you guys exactly what I mean by that. Own, when you get that loan from the bank, it's your home, right? You still owe the bank. Obviously, they have the title and all that stuff, but you own the home. You can refinance it. When you build equity, that equity comes to you. It doesn't go to the bank and things like that. So when you have some equity, that's when you can refinance. So what is equity? A broad-based term that applies to many different areas of finance. Equity is about ownership. So for instance, equity represents ownership in a company through shares of a stock. In real estate, equity is the ownership of a home. So when the value of your home goes up, so if you buy a home for $250,000 this year, next year, if you get an appraisal on your home and your home appraised at $275,000, you got some equity. Not only did the value of your home increase by $15,000, but you've been paying down your home for a whole year. So that 250,000 will probably be like 240,000 now. So you got some good equity in your property. That's the easy version of what equity is. People who pay a mortgage have a portion of the home's total value as their own equity in their home, while the homeowner, for legal purposes, own 100% of the home. They do not have all the home's value equity. This is because the lender who issued them the mortgage has the lien on the property, right? That's what I was saying earlier. So all the home was used as collateral to issue a loan, which is the mortgage, to the home buyer. So the home buyer will not have full equity in their home until the last mortgage payment is made and the home is paid off. When a mortgage is fully paid off, the homeowner has 100% of the home's value as equity in the property. So for some, it may make sense to take out a HELOC, which is a home equity line of credit, on the property in order to fund your other investments. So that's the cool thing about this is one of those things when I was talking about in the beginning, why you should get into real estate, because you can do something cool like this to allow you to either get more properties, or if you want to, add something onto your home to increase the value of your property, things like that. So what is a HELOC? So a HELOC is a home equity line of credit, is a home loan that uses the equity in your home as collateral. Because it's a revolving line of credit, much like a credit card, any payments free up money for you to spend. HELOCs are often used for home remodeling, home improvements, additions, but they can be used for any purpose, just like a credit card. So most lenders offer a debit card or checkbook that allows access to the HELOC. So unlike a home equity loan, HELOCs don't have set repayments. Instead, the repayment amount is usually the interest charged during that month. All right. So a home equity line of credit, HELOCs have a draw time, which is the length of time you can borrow from the credit line. So during the draw time, you can borrow and repay as frequently as you like, and you will only have to make interest payments. So once the draw period is over, you'll need to repay the principal and interest. The typical draw period is 10 years, followed by a 20-year repayment period. So alternatively, some HELOCs have a balloon payment, a required lump sum payment at the end of the draw period. So keep that in mind. So I know this was a lot of information. Some of you are probably like, what the hell is a HELOC? What does any of this even mean? So don't be, don't try to memorize all this. This would be good. So like I said, this is good. If you don't have property now, this is going to be good for you when you do get property. If you do have property now, you might want to look and see if you have some good equity, because there's a lot of good rates right now for refinancing. But like I said, they are starting to go up. The best time to refinance was probably 3 months or prior. Not saying it's not a good time still now, but rates are just rates are going up. And if you are curious more about HELOCs and you want to learn more, whatever lender you're going to go through, tell them, hey, I'm interested in, refinancing. Can you kind of tell me more about HELOC, what your guys' requirements are? Because every bank's requirements are not going to be the same, right? So you're going to start to notice that as you go further along in your real estate career. You're going to notice two banks that could be, a parking lot across from each other are going to have complete different requirements. You'll be able to get away, with bank A more than you'll be able to get away with bank B, but bank B might do this and bank A. So like I said, it just comes with doing your research, writing everything down, what people are telling you. Have people send you documents over. If someone tells you something, don't just take their word. Say, hey, can you send me that in an email? Or do you guys have that regulation somewhere, or where is that at, to where I can have this from my records? Because you don't want to just be taking he said, she said, because when you go to do something, that person either might not be there, or they might be like, I never told you that. I never said we can do that. So if they tell you something that sounds too good, or sounds like something that you're interested in, ask them to just send that to you in an email, or ask them to show you, where that is in their policy. Everyone has a policy. Everyone has, all this stuff that they can send to you. So keep that in mind. How much can I borrow with the HELOC? So the HELOC is limited. The HELOC limit is based on the amount of equity you have in your home, your credit score, and your debts. So lenders will also look at your total loan to value ratio. Depending on the lender, the limit is typically 85%. So that number is always changing, but typically it's going to be around that 75 to 85% of the market value of your home, minus any amount owed on the first mortgage. So lenders no longer offer HELOCs of 100% because of that 2008 recession that we had. So it was a big, crazy storm when they were doing that. So they stopped doing that for their full amount. Only the current market value is considered when determining the amount for a HELOC, not the amount you pay for the home, and usually not the potential future market value of the home. So you'll have to get it, your home reappraised at that time to see what that current value is. So here's a little example. So let's say your home's value is $250,000. You owe $150,000 on your first mortgage. So that means you have $100,000 in home equity value. $250,000 minus the mortgage balance is $150,000. So you could potentially take out up to $85,000, assuming your lender allows you to borrow up to 85% of your equity. But pay attention to how long, to how over leveraging affects your financial goals, because just because you're getting, this refinance, that doesn't mean that your time is going to continue to be the same. So let's say you get a 30-year loan, and you refinance, and it's going to push your loan out what your original time was. So does it make sense? The money that you're going to be paying in interest refinance, is it going to end up making sense for what you're trying to do, right? Are you going to take that money to fix up your home, to give your home even more equity for if you're trying to sell it? Are you going to take that money and invest it into something that's going to bring you a good percentage back? Are you going to invest that into another real estate property that you can eventually leverage that for in a year? So it's like, refinancing isn't for everybody, and it's not going to make sense for everybody. You have to sit down, get your numbers, get with whatever lender that you're going to refinance with, see what, what type of upfront costs that they have. You know, how long is this going to be? How long is this going to push your mortgage out? How much are you going to be paying now? How much are you going to be paying over time? So these are all the things that you need to be thinking about, and you won't be able to get those exact numbers until you're in this situation, and then you contact whatever lender that you're going to go through. So I can't, you know, you can't be like, hey, if I want to do this, if I want to refinance, I wouldn't be able to tell you because I don't know what type of terms your lender is going to give you. So these are the questions that you want to be asking the lenders, because they're going to be the one that's going to be doing the refinance for you. So I can't be like, yeah, they're going to give you, you know, 85% and they're going to only charge you this. I won't be able to tell you guys that. So that's what the lenders are going to be able to tell you. So anyways, let's keep going on. HELOC can be used for whatever the borrower deems necessary. So let's say a couple uses their HELOC fund to remodel their kitchen after paying down the balance on the HELOC for several years. The couple's child goes off to college. They decide to pull from their HELOC to cover tuition, right? Very common. A lot of people do it. Since it's still inside their 10-year draw period, this time they can choose to make interest payments only, not paying back the principal until the payment period begins. So that's pretty self-explanatory. Hopefully that doesn't seem too complicated. I try to put an easy scenario on here, but you can pretty much do whatever you want to do with this money once you refinance. So like I said, some people want to use it to make upgrades. Some people want to use it to pay down debt. Some people want to use it to get your next investment property. Some people want to use it to invest in the stock market, or they want to invest, be an angel investor for a business, or maybe you want to start a business, right? So there's no restrictions on what you have to do with this money, but you do have to pay the money back. So know that. So I personally wouldn't tell no one to refinance just to, you know, blow it, have fun. I mean, if that's what you want to do, hey, that's what you want to do. But I personally wouldn't refinance unless I have a game plan on what I'm going to do with that money, right? If I'm going to refinance, I want that money to make me money. That's the whole name of the game, not go blow it or spend it on unnecessary stuff, but to each its own. So this is especially true if property you want to buy needs some work, or you plan on flipping it. So using a HELOC prevents you with getting hit with a bunch of loan fees up front. And then once you flip or refinance the investment property, you can pay down the HELOC and then you can use it again on your next property, right? So that's a really good way to use your HELOC and to get that money back. So it's like you're almost paying yourself over and over again, because once you refinance and once you fix up the property and your next property and you get some equity in that, you just turn around and do it again. You're just going to be bouncing. You're going to 5-10 years down the road, you're going to see that you got 10, 15, 20 different properties because you just keep doing this over and over and over again. So it can be a really fun process. But like I said, if it needs to fit what you're trying to do, it's not going to be for everybody. It's not going to work good for everybody. Refinancing isn't, you know, that shouldn't just be like your end goal or things like that. So keep that stuff in mind. All right. We covered a lot in a short little period of time. Today we covered traditional banks, right? So how to find traditional banks, what to do, what to expect from them. We covered a little bit about FHA. We didn't get fully in depth, but we covered the main basics about FHA, right? To kind of give you a little bit better understanding. And then we covered refinancing, the HELOC part of refinancing. There's other ways to refinance, but like I said, when you find the lenders, you can start asking them, hey, you know, I heard someone talking about a HELOC. What are some other ways to refinance? You know, there's a cash out refinance and there's a few other ones. So yeah, that was our class today on real estate. Like I said, next class that we do on real estate, I'm going to cover those other two sections of financing, and we'll kind of get into it for that. So if you guys have any questions for me that you don't want to ask on here, or maybe a week from now, 2 weeks from now, you guys can hit me up on my social media. NoTimeZone 2 O's on Instagram, NoTimeZone _ on Twitter. I do have courses on Gumroad. I have a FHA course that I get really more in depth with. I have a flipping guide that teaches you how to make money reselling products online or in person. And I also have a traveler's guide that helps you save money when you travel. Everybody in the Wealth Squad gets 30% off. You can use discount code Wealth Squad. So now we're going to open up the floor to any questions that you guys have. No question is a stupid question. This is a safe spot for you to ask whatever you want to ask. I just please ask that you guys be respectful. There might be some kids or something listening. So let's fire away. Go for it.
So question. So in regards to someone who has bad credit, right? And in the current process of building that credit, like let's say my credit is right now is in the low 500s. I'm
Okay.
interested in doing the FHA, and I'm going to end up having to put the 10% down, and I have that to put down. And depending, like let's say it's a $300,000 property, would you
Right.
recommend me waiting until I rebuild my credit, get in a better spot to put the 3.5% down, or would you say jump in and then once my credit's better, I can refinance and fix it up at that time?
It's hard to say which would be better, right? Because you have to look at it like this. Let's say it takes you a year to get your credit. I'm just throwing a bunch of different scenarios out just so you can kind of get a little understanding. So
Yes, sir.
let's say it takes you a year to get your credit to where you qualify for the 3.5%. And let's say you find a property. Are you looking to get an investment property, or are you just looking to buy just for your
No, I want to get into an investment property.
Okay, good.
So I want
So
to get like a triplex.
okay, so let's say you find a duplex right now, and it has a great cash return with the rents and everything like that. It's covering your mortgage, it's covering your insurance, it's covering your taxes, it's covering everything, and it's also putting money into your pocket, right? So let's say a year from now, the real estate market shoots up, and I actually, I have a similar situation to this happening to me a while ago when I first got into real estate. And the real estate market shoots up after a year, and you're able to refinance, and you're able to switch to like a conventional, or you're able to just take out a HELOC or a cash, and then you're able to go get multiple properties. So let's say you do that at the 10%. Now let's say you wait a whole year to go, and the market shoots up. I'm just throwing scenarios out. The market shoots up, and you're not able to find the property you want, and you're gonna, you do find a property, and now since the market has went up and things like that, based on the rate that you get your loan at, you're gonna be in the red. So meaning that your rents and everything that you receive from those properties isn't gonna cover, the complete principal interest of your loan. It's not going to cover all your taxes and your insurance and things like that. So you could be missing out on a great deal, was the point that I'm trying to make. So
Yeah.
It could go that way. It could not go that way, but just know that, your rates are going to be different. Like I said, I don't know how long it's going to take you to get from where you qualify to the 3.5% based on where your credit is at and based on what your lenders require. So I can't really say it would be better for you to wait until your credit is good, because you're going to get a lower interest rate. You're going to get lower rates. You're going to get better rates. So it's going to be better on the back end longer down the road. But how do you know what's going to happen? We don't know what's going to happen in the next year. So I don't want to say wait till you get a 3.5 rate. But if you were to get something now, it's already going to, by this time next year when your credit is better, now you're already on property number 2, and you got enough equity into where you're able to refinance into a conventional. So it's like, now you're going to give yourself, a better position. So it's one of the questions where I can't really give you a do this or do that, right? You're just going to have to kind of look and see and think about that stuff, and think about your market, where you're at. Is it increasing? Have rents been increasing a lot? Have they been increasing a little bit? Have they been going down? Have they been doing any construction build? Are they bringing any upgrades? Are there any things like, Amazon plant, a Tesla plant, you know what I mean? Things like that are going to draw the markets up. So you want to look at that stuff and take it into consideration.
Yeah, no, I appreciate that. That's great advice. I live in Tampa, Florida, just for reference. And so they're doing all kinds of different things.
Oh yeah,
right
great market out there. Get in,
yeah.
man. Tampa is on the uprise. I have 2 people out there right now. I'm trying to help close a 4-plex. Yeah, get in. It's a good market. The market is going up in Tampa.
Yeah, I'll DM you too with any additional questions I have.
Sure, hit me up.
Thank you so much. I appreciate it.
Mm-hmm.
Hi, I have a question.
Hey.
What about, because I haven't bought a house yet. I'm thinking about it, but I'm nervous because I have a really high student loan. It's 6 figures.
Mm-hmm.
My credit score is pretty decent. It's in the 700s, the low 700s, but it's like, do I want to get a mortgage on top of the student loan that I already have?
Right. That's another tough question for me to ask, because I don't know, your financials, what you got coming in. And then also, if you were to get, let's say, into a 4-plex, if you were to go FHA, get a 4-plex, 2 of the units cover your mortgage and everything. 1 of the units, you're able to pocket all that and you're able to live rent free. That unit that you're getting that that extra money and you could put that towards your student loans to help pay it down sooner, right? That could be one scenario, but that could also backfire and not work like that. And so it's like, you know, what if you get a duplex and you live in one side, you're trying to rent out the other side, and you're not able to rent it. So now you're not bringing in rents. So now not only are you having to pay for your mortgage, but you have your other debts to consider as well. So it's one of those questions where I can't really give you a do this or do that. It's just going to be based on, you know, running your numbers and seeing what works for your situation. I hope that makes sense.
Yes, it does. And the last question I have, I'm sorry, is like, as far as putting a down payment, is borrowing from your 401k a good idea or no?
There's a lot of different things that you can do. It's like that's another one, you know, because now you're tapping into, you know, your 401k. I know a lot of especially like, you know, Roth IRAs, Roths, and 401k, you can borrow against them for real estate purposes. But just be careful with that stuff. So like I said, you just got to really break your finances down, see, you know, ask, get with the lender, get with who your 401k is through, see what they allow, what they offer, get with the lender, see what you can do with them, and then get a full picture of everything and see what all your costs will be and kind of base your judgment based on that, on what works from you from there.
Okay, thank you so much.
No problem.
Now, what would you recommend for a first-time real estate investor? Haven't had a job in like the last 2 years. My company's just going to be just upstarting, and I have about maybe 20% for a we'll say about like a $200,000 property. What methods would you recommend far as getting financed for that?
So what a lender is going to want to see, they're going to want to see how you're making money, right? So they're going to want, if they're going to give you a loan, even if you have the money, they're still going to want to know where you're getting this money from, and then also how you're going to be able to continue paying it forward, right? So just be prepared. If you are going to go with the lender, those are going to be things that they're going to want to know. They're going to want to know, you know, if you're self-employed, that's fine. If you do a bunch of side hustles, that's fine, but they're going to want to see consistency. They're going to, if you Uber, or if you Lyft, or if you go around clean cars, or if you have, if you go cut grass or cut hair out of your, whatever it is that you do to make money, they're just going to want to know, because you got to think they're giving you a big amount of money and they just want to protect themselves.
Okay. So would you recommend just starting off small, buying a smaller property, and then being able to leverage that?
If you have the funds, you don't have to start small, but just know that these are what the lenders are going to be requiring. This is what they're going to be looking at. But no, you don't have to start small. If you have the funds, and I recommend people dive in, go to the deep end. When I was reading blogs and starting out, everyone says stay away from a fourplex. And that's the very first property I ever got in my life, was a fourplex. And it was probably the best thing I could have ever did.
Okay.
I went big, right? Go big or go home.
Definitely.
Yep.
Thanks.
No problem.
Hi, I have a question.
Hi.
Well, really, I just want your opinion. What do you think about purchasing a property that already has a tenant with the lease, but they're not current on their rent?
Ooh, that's actually a really good question. I would figure out how much longer are they on the lease? Do you know?
So the property that I was looking at, it says that it's due until February. So
February of next year?
Yeah.
I would look and I would talk with property managers in that area and see what the law is to get them out of there, because I know the law has changed with getting people out of apartments in a lot of states because of COVID and things like that. So if you're able to remove them because they're not paying rents, then I would say start looking at that. If you're not in your area that you're in, if they are allowed to stay until the lease expires, or whatever weird laws your state, your county has, I would say stay away from it, right? If they're behind on rent, what incentive do they have to get current just because you take over? You know what I mean?
Okay, thanks.
No problem.
Hey, excuse me, I got a question.
Yeah.
Hey, what what do you know about lien property and getting into about lien property, like the people who hasn't paid the taxes on their houses?
Talking about buying the tax liens and the tax deeds.
Yeah.
Yeah, I know a little bit about it. I personally haven't done any myself, but I actually know a lot about it. I personally never done any myself.
Like, can you like tell me a little about it? I just want to hear it from somebody who like actually.
All right, for all you guys out there listening, so what tax lien and tax deeds are is pretty much when people don't pay their taxes and things like that. It'll go into a lien or a deed, and you're able to buy like a someone's deed for, let's say, $2,000, and then they have, every state is different. Some states, most states are about 2 years that that person has to catch up on their taxes, and if they don't catch up on their taxes, then you just get the title and you just have to either pay the taxes or whatever it is. But I would say start with your county assessor, because that's where most of them are going to be. Most of the auctions are through the county assessors. So go to your local tax county assessor office and ask them when the next lien deed auction is, and then you'll be able to get more information for that.
I appreciate it.
No problem.
I have a question for you.
Yeah.
First and foremost, appreciate you as usual taking
Sure.
the time out to teach us this valuable information, man.
Oh yeah. Thanks for
I wanted to
tap into every class.
Yeah, definitely. And just on not to be in your finances, but like as far as like how long have you been in the real estate game, and like have you always done turnkey, or have you got into like a distressed property, say for instance, do 2 or 3K loan?
That's a really good question. I only do turnkey. I don't do I don't flip. I don't do the burr. I'm looking to try a burr strategy here pretty soon. I'm pretty sure I have it down. Seems pretty simple. I got a few friends that do that. But the way how I invest, I have, and I talk about it all the time, right? I have this formula to where I know how much rents I need, and I'm always calling lenders to see what rates are. So I know automatically I can look through 100 deals in probably 20, 30 minutes, right? Just based off of numbers, it's a numbers game. How much you're collecting for rents. Do you have room to increase the rents? How much money do you have to put in the property to, increase the rents and things like that? So I have my specific numbers, this strategy that I have. I love turnkey properties. Not saying that other ways can't be great. And I know a lot of people who are doing very well in real estate, buying distressed properties, doing the burr method, flipping, wholesaling, whatever it is you want to call it. There's so many areas into real estate. So something that I learned along the way is that you don't want to bounce around in too many areas, right? Because then you're not going to get good at anything. So you want to find, there's nothing wrong with trying all these different methods and then sticking to one that you're good at and then put your foot on the gas. So for me, the very first property I ever got was a turnkey property. It worked out great. Everything, the numbers matched to exactly, I had this notebook that has all these numbers, when I was just getting them from my real estate agent. I'm like, okay, if I'm bringing in this much for rent, I got the utilities on them, so I don't have to worry about that. Or I got to worry about taxes. I got to worry about insurance. I got to worry about P&I. I got to worry about closing costs. I got to worry about the inspection costs. So I'm writing all these different numbers down, and the rents that were coming in was going to cover everything. So I was pretty much living rent free. So I was like, okay, if I do this right, this is where I should be at. And then by year 1, I'll be able to do this. By year 2, I should be able to do that. So I came up with a game plan and it worked. So I think if me buying a turnkey for whatever reason didn't work out how it worked out for me, I probably would have tried other areas in real estate. But for me, turnkey has been working out so well, I haven't even wanted to look any other way.
Okay, cool. Appreciate it. Also, real quick, in the courses that you sell, do you go into detail in any of your courses as far as like how to, really get in detail with running the numbers for it to really make sense for you?
I did not, because my numbers are very unorthodox, and I've actually showed a lot of real estate agents. I kind of break down to them, and they're like, "Wow, that's very different." So I don't talk about it because it's not
Conventional.
Yeah, it's not. It's going to be individual based. It's going to change based on your location, where you're at, different things, because different states, different counties have all these different laws, tax laws, all these different things come into play. So before I invest, like if I invest out of state, I research what those state laws, those city laws are, what, you know, the taxes for that state and all these different things.
All right, cool. Appreciate you.
No problem.
I have a question about the ELAC. So I have a 3 family, right?
Okay.
I can go to any bank to find out about the ELAC.
No, you can't go to any bank. So some banks won't refinance. I ran into this issue a couple years ago. Some banks won't refinance if it's multiple properties. So you just have to keep calling around banks, let them know, hey, I have a triplex. I'm looking to, you know, do a HELOC. What are you guys' requirements? Some banks will tell you, no, we don't do, you know, multifamilies, or we only specialize refinancing in this. So you're just gonna have to call around and talk to multiple banks.
All right, thank you.
No problem.
Yeah, I wanted to say thank you for the course. Feels like I'm learning something every time you give a lecture. But on top of that, HELOC, you're exactly right. That resonated so well with me. I went to the bank the other day, and 2 different scenarios they gave me for the numbers. As far as if I open an account with them, my loan would be different.
Right.
They said it would take 60 to 90 days for one. The one down the street told me they can give me the same exact money in 2 weeks, but it's like a little bit higher interest rate.
Yep.
Which I thought was weird. So I think I might go with another bank just to see what it is, but those were 2 banks right on the corner.
Yep.
So,
and I'm glad you brought that up, and thanks for the praise, man. I'm glad you guys are, you know, it's really good and reassuring hearing that you guys are learning stuff, man, because I promise you guys, I only do it. Chris only has me on because he knows I really care about this stuff. I'm passionate about it, and I really want you guys to learn and get out there. But to kind of speak on what you just said, as you guys hear, I don't know him personally or anything. I didn't talk to him, but these banks, that's what they'll do, because so many people will not take the time to do the research. I said what the numbers were in a couple classes ago on how many people search different banks. Most people will just they'll reach out to one bank and they'll take whatever numbers those banks give them. So I typically, this is how you put the pressure on these lenders. You put the pressure on them by asking them multiple questions. You put the pressure on them by saying, hey, can you email me those numbers, what you're coming up with, so I can compare with another lender? So once you say you're comparing with another lender, the whole tone changes, right? You'll get the best numbers. Because they, like, if you let them know, hey, I let them know up front. I let my real estate agents know I'm not just working with you. And when you tell your real estate agents that, it triggers something in them for them to go harder, because they know that you're gonna, you know, spend your money, you're gonna spend it with someone. So they want you to spend it with them. So it's like, they're gonna send you the best deals. They're gonna, you know, get back to you quicker. When you do the same thing with lenders, they're gonna give you the better rates. It's like, it's funny because I went with a lender and they gave me their rates. And once I asked them to send me that in an email, so I said, so I can compare with another lender, they were like, well, wait, let me rerun the numbers and let's see what we can work out. So that right there, it tells me, all right, you guys are trying to be slick and you guys are trying to get over on people, right? But they have a standard. Like I said, they have a standard that they do. And if people just accept it, then hey, no harm, no foul. But when you start asking questions and you start shopping around, that's when you get the best deals.
You're exactly right, because they clearly said, oh, I have one of these. The other bank said, oh, I have one of these. I'm thinking everyone does one of these at these banks. I mean, someone ain't really got to always do one. And then I should have done exactly like how you said, is like write down their information, because he told me this price. And I was like, I can probably try to match that with the bank right across the street to see if that was right. But he just did it on like a little calculator and I wasn't able to get it emailed or saved.
Ask them for print. Tell them
Tell
them you need to see each individual thing that they're going to be charging you for. You got to think, this is your money. Like, you need to know, like, if a lender's like, oh no, we can't show you where we crunch these numbers, that's going to raise a red flag to me. I'm like, what do you mean I can't see? Like, I'm giving you, like, I'm going to be paying you guys every month to refinance for me, but I can't see where these numbers are coming from. That should already raise a red flag. A good lender is going to be like, yeah, I'll send you those numbers over right away. They're not going to care because they already know that they're giving you some of the most competitive rates. And that comes with you shopping, and that comes from you just kind of educating yourself, asking questions and things like that. The more you keep doing it, the better you're going to get. And you're going to be like, then you're going to find you're gonna find that lender that is always on top of their game, and they know they're gonna, they know that you've done business with them, and then from that point you're not even gonna have to worry about that stuff no more.
Oh, I appreciate it. So traditionally, a HELOC, the first 10 years is basically just paying the interest. That's what I got from both of them.
Yep.
Basically, the first 10 years is just paying the interest, and
Yep.
you can pay extra to the principal, but they don't really want that. They just want you to pay the interest.
Yep, they just want you.
Yeah. Okay. I appreciate it. Thank you.
No problem. Thanks for tapping in.
I got a question. Go ahead.
Oh, you want me to go?
Go ahead.
So I was refinancing out of my FHA into a conventional 15-year. So because I already knew about the FHA, you can only have one at a time.
Right.
So the conventional and the HELOC are two different things, or are they the same thing? Kind of like, because I was going to do the from 30 to 15 to a conventional.
A conventional loan and a HELOC are different things. Yes.
Okay, got you. Because I was going to use I was going to go into a conventional for 15 out of my 30, and then I was hoping to use the equity out to make my first purchase.
Right. On
another property. And then I kind of dipped into knowing what the HELOC thing was, but I didn't know which avenue was really the best way to go as far as HELOC and conventional.
That's a good question. So this is exactly what you want to do. Are you going through the same lender, or have you been working with different lenders?
Oh, I've been shopping.
Okay, so this is what you want to do. Compare. Ask them, hey, if I were to go conventional, or if I were to go this route or this route, tell me what my options are. Tell me what your rates are. What can we do? Right. So that I'm actually in the process of that right now. And one of my lenders, I have them crunching the numbers, and I keep them busy, but that's their job, right? You want to keep them busy. You don't want to just accept the first thing that they tell you. Because most of the time they're just going to tell you the standard. They're just going to tell you the standard. And then when you tell them, well, I'm looking to do this, I want to get creative with this. What can we do with this number? That's when they're going to be like, oh, okay, this person actually knows what they're doing. They're shopping around. Then they kind of act a little bit different. It's weird that they do that. And I wish they would just give you the best rate that they possibly could. But you have to think about this on a money standpoint, right? They're trying to get as much money as they can without people asking questions. But if you come with the right questions, and if you're on top of your game, you'll still be able to use them. But you're just gonna get the best rate possible that you can get for yourself. And that's what you're trying to do.
Exactly. Okay, got you. So that's what my confusion was. So the HELOC and the conventional are two different things.
Yeah, they'll be able to break them both down for you on what you have to do for each one.
Got you. All right, cool. Thank you.
No problem.
Okay. Mine is kind of a two-part dealing with the PMI. I was told that they discontinued removing it once you paid it down. I know it used to be if you paid 20% off, right, or 20% down, that the PMI can be removed if you requested it. But I was told that is no longer, you have to keep it for the life of the loan. Is that correct?
No, that's not correct. You don't keep so the PMI is if you put the 3.5, if you put less than 20% down. So if you put 20% down up front, then you don't have to worry about the PMI.
Right.
Right.
But once you do have the PMI, I was told that it would have to stay on for the remainder of the loan when you put the 3 point whatever down.
There's many ways to get out of the PMI. It's not for the life of the loan. It's after you get a certain amount paid down, then you can request for the lender to take it off. And once you go, and when you're signing your paperwork, and all that wording, the verbiage is going to be in that paperwork with the loan. So talk with your lender. Maybe some lenders, I don't think lenders could say that or do that. But I don't want to give you wrong information and say that lenders aren't doing that. And if they are, that's something I haven't personally heard of. I haven't heard of them saying that you're going to have the PMI for the life of the loan, or lenders are making people pay PMI for the life of. This is the first time I've ever even heard that.
Well, actually what it was, a local bank had a house buying seminar. And during the seminar, he stated that this was going to be, but he provided a date But of course, COVID and everything transpired, so it may have changed some things, but I didn't know if that actually went into fruition or if it was just for certain type of loans.
Yeah, I don't know, but I know that typically once your home reaches 20% equity, you know, you're able to get that PMI removed.
Okay.
Yeah,
Thank you.
no problem. So I would look
Sorry.
more into that. Yeah.
Hey, quick question. So I heard kind of two things there. So is it paying down the original loan to 20% of that original amount, or does it
Once your home
also,
reaches 20% equity.
I see. So you can build equity, like for example, in the situation we're in with COVID, how the market's basically a seller's market.
Right.
You could potentially get your house appraised,
Right.
and
Exactly.
it could
That's all you got to do is get your house reappraised, and that's it. And if you reach that 20% mark, you're able to contact your lender and you're able to get it removed.
Oh, that's dope. All right, cool. Thanks, man. Appreciate it.
Hi, I have a question.
Hey.
I have a multifamily house in New York, and then I have my current house in New Jersey. I heard that you have like out-of-state properties. I want to do the same, like probably Georgia or Florida, which are cheaper properties. How would you suggest that I go about like researching and just learning more about how to do stuff out of state when I'm still going to live in New Jersey?
It's not hard to do out of state at all. What you'll want to do is you'll want to start reaching out to real estate agents in the areas that you want to invest in out of state and have them start sending you listings, and also have them send you lenders and then home inspectors, and then also property managers. So you can start researching the area, right? So you want to be as prepared as you can, and then a lot of times, a lot of places you can do, they're doing like Zoom tours or digital tours where you can just watch it from your computer or your phone. And if they don't have that, that access for you to go. And if you don't physically want to, fly down to look at the properties, which I recommend you do, go down and look, because you just want to look at the area. You want to look at the condition of the property, because you're going to be dealing with agents that you don't know, right? So you don't know, they're going to try to give you the best judgment, but what might be good to them might not be good to your standards, right? So yeah, so you just want to start building those relationships, start looking. But investing out of state is easy. It's not hard at all. And a lot of people think that you can't invest out of state, or they think it's hard. Once you have a property manager, and I had a few classes ago about property managers, and I talked about what to expect from them, what type of questions to ask. Once you have that property manager, and a good one, you don't even have to worry about anything for out of state properties.
Okay, thank you. Would you suggest like starting out of state with like a one family, or try to do like a multifamily?
I like to go in, the deep end. I like the bigger challenges. So that's me personally, but just take on what you can take on and what you feel like you can handle, and what works the best for you.
All right, great. Thank you so much.
No problem. All right, you guys, we'll take one more question before we get out of here. I know you guys got stuff to do.
Hey, how you doing,
Hey, I
man?
have a question. Oh,
Go ahead. I'll take both of your guys' questions. Don't worry. I'll take both of them. So whoever wants to go first.
Oh, you can go first, man. Not to interrupt.
yeah, I have a question. So my mom has her own business, but she never like, I guess, claimed it, I guess, like to the tax, like like as an actual business. And so she doesn't I guess, like, doesn't file anything, so it doesn't show that she makes anything, but she has like a lot of money saved.
Don't be
Do you know like any lenders that would like
on here
help out with that?
You don't know who's listening on here. I wouldn't say that out loud. No, because she's gonna have to file a 1099 or something like that. They're not gonna take, because there's no way for them to know exactly how much money, they look at, not saying that she's doing any money laundering or things like that, but these lenders have to take that stuff into consideration, because that's, people that typically don't file, not saying that, your mom is doing anything wrong, but people who typically don't file aren't filing for a reason, right? So lenders stay away from those type of people, unfortunately.
Oh, okay. All right. And then another question, do you think like, how do you go about like, if you want to buy like a investment property, like in another state? Like, is that something you would recommend or no?
Yeah, I recommend it. It's very easy. Someone just asked that question, but like I told her, contact, the real estate agents in that area, have them start sending you, properties for, what fits around your parameters for that area. Start talking with inspectors, property managers, and lenders in that area as well. And then you can also talk to lenders in your area. Some lenders will lend you the money if you're doing out-of-state deals. Some will, some won't. So you can start talking to lenders in your area, tell them what you're trying to do. But you want to start talking to lenders in other areas as well, so you can see what their requirements are. You want to talk to the agents so they can start sending you listings and things like that. And then also start working with property managers so you can start building relationships and things like that. So you just kind of want to stay ahead of the game.
Okay. All right. Thank you.
No problem. All right. Who had that last question? Go ahead.
Hey, so thank you again for this presentation. To sum up everybody's thoughts and opinions, this was excellent. And I think I messaged you about a week ago just about me being Army reservist and not being qualified for the VA loan until I've served 6 years. So yeah, so as part of my contractual agreement, I do have a bonus within that 6-year period. And so in the meantime, I think just me and my girl, it would behoove us to rent in the meantime and just use that bonus as a means of venturing into real estate investing.
Yeah.
So I wanted to get your opinion about that, because I think having the purchase of or down payment on like a townhouse or just having a mortgage in the meantime wouldn't really be that strategic, or would it, as a means of building equity?
So you're in a very, very unique situation. So for the people that are still in here listening, he hit me up a while ago. He's a reservist, right? Are you in the reserves?
Yep.
Yeah. So he's a reservist with the military, and VA is one of the benefits that you get being in the military. But active duty members, I get it, I believe, after 2 years serving, but reservists have to wait 6 years. So for you, you're in a very, very unique situation. How many years do you have in right now?
I'm just getting started.
Are you just getting started? So great. So this is what you want to do, right? So since you're about to get that bonus and you're already thinking about real estate, leverage the FHA, right? So leverage the FHA, get you a duplex, a triplex, a fourplex. And then it's like so what you have coming in 5 years, right? You have free money. You have $1 million coming to you in 5 years, right? The FHA or VA, there's no cap anymore. So if you can afford $1 million worth of real estate, you can get $1 million of real estate. So you have that coming to you, right? So use now. So you've been saving money, you're about to get this bonus and things like that. Use that to leverage FHA, because think about where you'll be at if you were to start right now. And let's say you got a property sometime this year, and let's say it took 2 years for you to get some good equity in it for you to take out and get another property, right? So 2 years down the road, you get another investment property. Another 2 years down the road, you get another investment property. Another 2 years down the road, you get another investment property. But now you're at year 6, you got 3 investment properties, 3 fourplexes, you got 12 doors that are paying you money every single month. And now you have access to a VA loan. Like the sky, I promise you the sky is going to be the limit, because now you can go get you, now you have 12 doors that are paying rent. So when you go to leverage these banks, they look at if you have real estate, you can use those, that rent that you're collecting, that can be considered income for you. So not only will you have, I'm just being hypothetical. So not only will you have 12 doors under your name, but lender, you're going to have work with lenders. You're going to have your real estate network is going to be solid. You're going to have a great real estate agent. You're going to have a great property management team, right? You're going to already have 6 years in the game. So that you want to take advantage now. So by year 6, when you have that VA, you can use that. You can get a $600,000, $700,000 property, and all you have to use is the rents that you're collecting from these other 12 units. And you can use that as your proof of income. And then now you got $700,000 to get into a you know, somewhere in a bigger city like, you know, like a LA or like somewhere where rents are going to be expensive, and you're able to take a bigger risk and get a bigger building, and now you're going to start collecting more money. And then you're just now you have that VA effect. So 2 years after that, when you get equity in that, you refinance that into a conventional, free up your VA, turn around and use your VA again for your next property. And then, you know, every other year you get it set up to where you get out of an FHA, roll it into a conventional, and then use the FHA again. And then 1 year you'll be rolling out of the FHA into a conventional. 1 year you'll be rolling out of your VA into a conventional. You'll be able to keep using your VA and your FHA 10, 15, 20 years down the road. You're going to have a crazy real estate portfolio.
Awesome. Thank you. I'll do my research more into FHA loans.
Yes, sir. All right, you guys, that's it for the questions. Man, you guys have some really great questions tonight. I appreciate you guys tuning in. You know, this is something really special and really unique. Wow, it's getting dark quick. I didn't realize. Hopefully you guys can still see me. Anyways, it doesn't matter. So this is something very unique, right? The Wealth Squad, what we have together, you know, you guys are all a part of this. This is a community, and something, I don't know if you guys are doing it, but I would start reaching out to other people in the Wealth Squad if I were you guys, because you guys just don't know who is in here, right? We might have people who are lenders. We might have investors in here. We might have real estate agents in here. We might have property managers in here. We might have, you know what I mean? So it's like, use this, you know, we're able to reach out to people on here, get on these forums. You know, we have a whole real estate group. Get in there, start looking and see what people are saying, you know, get out there. Get your feet wet. You got to put this stuff to action. Like I said, there's already people that have been in these classes that are taking everything that I've already taught. And I believe this is class 6. Just from the information that I've already given, people have already been, you know, putting in offers, closing deals, you know, getting creative with deals. So it's like, this is no BS info that I'm giving you guys. This is stuff that I do personally. And, you know, you guys can be doing it too. There's nothing, you know, there's nothing special about me. I didn't have anybody that, I don't have anybody in my family that has real estate background. I never grew up with any people that were doing real estate. I didn't know about real estate until, I mean, I knew about real estate, but I didn't know how to get into real estate until I was older, right? Till I was older. So if I can do it, you guys can do it too. There is no, you don't gotta be, you know, super smart. You just gotta be able to write your numbers down, figure out, you know, your numbers. You got to be willing to call people and figure out what the rates are, how much your monthly payments are going to be, match that up with how much your rents are going to come in. Are you able to increase the rents? You know what I mean? So it's like, there's nothing special about me that you guys can't do it too. I promise you, I don't consider myself the smartest person. I don't think I'm the best real estate person, but I get out there, I get it done, and I'm able to make money from it. It's, you know, stuff that's able to change my life. I'm able to, you know, leverage real estate. I'm going to be able to pass it down. You know, that's the whole goal. Pass it down to my kids, let them pass it down to their kids, and start this whole generational wealth thing. So take this stuff serious, you guys. You know, I put in a lot of time to give these classes. The other teachers, I hope you guys are, you know, taking advantage of those other classes as well. We have some really great teachers that are within this. Everybody is, you know, pretty positive. Everyone's trying to level up. So it's like, we're trying to pick each other up, and we're like starting this chain where we're trying to level each other up, because I want you guys to win. Me sharing this information and telling you guys everything I know is not going to hurt me. It's not going to stop me from getting in real estate. It's not going to stop me from finding deals. It's not going to stop my money from coming in. So it's like, I want to help out as many people as I can. I wish there was something like this, you know, when I was first starting out. I would have loved to have been in something like this, especially for the price, right? You really can't beat this information. So, yeah, I appreciate you guys. I appreciate your time. Like I said, if you guys have any additional questions, please, like, you know, people say, I try to get back to you guys as soon as I can. I know there might be some people that I might miss here and there, but I promise you, I try to get to you guys. If I happen to not get to your message, please attend these classes when I do and just ask the question. If I don't answer your question, I promise you, it's not personal. I'm not, you know, skipping out on anyone. I try to get to you guys. But yeah, so good questions tonight. This was a really good class tonight, you guys. I appreciate you guys. And I hope you guys have a good rest of the week. And yeah, enjoy the rest of your night.
Appreciate you.
Thank you.